بسم الله الرحمن الرحيم الحمد لله رب العالمين على بركة الله نبدأ الجلسة الثانية. Session 2, the adoption of international Islamic industry, technical standard, current status, and the way forward. I would like to ask His Excellency the Chairman, Mr. Noor Abid, and the speakers, Mr. Omar Ansari and Mr. Suhaib Umar, and the commentator, Mr. Muhammad Farooq Reza, and Mr. Nader Rahimi, and Mr. Ash'ar Nazim, and Mr. Khairul Nizam. We will start, inshaAllah ta'ala, ala barakatillah. Your Excellency, the mic is yours.
Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala Rasulihil Kareem. Assalamu alaikum, ladies and gentlemen. Welcome back, and thank you for coming back. Normally, after you get a break like that, more than half the people disappear. So, alhamdulillah, I'm glad to see that it's more than half that have been brave to come back. And inshallah, we'll have a good session and good discussion. Let me just briefly start with the introductions of the distinguished panelists. On the right, Khairul Nizam has flown in from Malaysia. He used to be the Deputy Secretary General of AAOIFI, has contributed a lot to AAOIFI, and look forward to hearing his comments today. Suhaib Umar is advisor on Islamic financial services at Central Bank of Bahrain. He'll be presenting a paper today on standardization of Sharia governance. It's aligned with the theme of the conference, qualitative growth and standardization. So I hope you will have a lot of interest in what he's got to contribute. Nader Rahimi is an Islamic banking partner in Ernst & Young, has been there a while, and we would like to hear his comment. He told me he'll be a bit controversial. So let's see what he has to say. On my left, we have Omar Ansari. He is the Deputy Secretary General of AAOIFI. He'll be presenting a paper on standardization of Islamic technical standards, and he's got a very detailed presentation, which I've asked him to please you and us stand between the audience and the lunch. So try and be brief, so let's see what he can do. Farooq Reza is Managing Director of Finance Advisory, Islamic Financial Advisory Services. I was talking to him just before we came in, and he also promises that he really wants to be controversial, even though he's on one of AAOIFI boards. But I wait to hear what you've got to contribute. And finally, last but not least, Ash'ar. He is a partner, was partner with Ernst & Young. But given where the young brains are going, he's in the process of setting up a fintech company. And he tells us the future is there, so we would like to hear his comments too. So without further ado, if we can hear your presentation first, Omar, please.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Assalamu alaikum, ladies and gentlemen. Alhamdulillah, this is a pleasure to be with you all for discussion on a very important topic. And this topic is something that we are hearing from the industry time and again, from different forums, that there are changes which are needed. We need to improve the standardization. On one side is the theme of the conference that we have set up, that is standardization and qualitative growth, that we have been focusing on quantitative growth, but we need to focus now on the qualitative side. But at the same time, we need to focus towards better adoption of our standards. And better adoption of our standards cannot happen unless we change ourselves, unless we improve ourselves, unless we match ourselves to the global standard setters. We come closer to them in terms of quality. We bridge the gaps that we have with them to the maximum extent. So, as Mr. Noor Abid has already said, that this topic is big, so the presentation is big. I'll try to keep it very precise. I'll try to focus only on the key points. Actually, this presentation is a part of it's like a summary of a short study that we are finalizing on the IFRS and AAOIFI financial accounting standards and the Sharia-based accounting. So maybe that book, it's almost in the final, we are just finalizing the final first cut, and we'll be having some peer review for that. So that is actually part of the broader project, I would say. And at the second, on the second side, it is impacted by a comprehensive strategy project that AAOIFI is actually undergoing. And it is like some of the things are coming from the team, some of the things are coming from the work that we are already doing, and some of the things are coming from the strategy and the ideas where we need to go. So let me take you quickly through the things. I'm focusing on one specific part right now, that is AAOIFI FAS versus IFRS and how we can bridge the gap. On the first part, I will talk about what are the conceptual differences. Obviously, there are a lot of things that have been written, and there are a lot of things that can be further written. But in a nutshell, when we talk about Islamic accounting, we say that the Sharia-conscious users of financial statements have some information needs which are not exactly the same as the conventional users of information. So, for the sake of meeting their information needs, which are driven from Sharia primarily, those accounting standards which are conventional need to be improved, or there should be additional standards, or there should be additional guidelines or something to bridge this gap. This is the summary. But how we do it, there are two aspects of it. One can be ideal situation. I say that, okay, if we live in an ideal utopian world and we say everything is according to the Islamic Sharia and Islamic principles, and we say that we want to do an ideal system, that I would say that we are far away from that state, and that state might require a comprehensive system of Islamic accounting. But right now, we are in a different world. And in this world, Islamic banking and finance itself is a carve-out of a conventional universe. So we need to be closer to the universe. We cannot be out of the universe right now. So we do not focus right now on the Islamic accounting. Rather, we focus more on the Islamic finance accounting, meeting the needs of the stakeholders. There are a lot of arguments that you can have for yes or no, and I would not like to go for that right now because this may take some time. But in a nutshell, we say that, okay, there might be people who say there is no need for Islamic accounting or Islamic finance accounting, but there is a set of experts, both from the Sharia side and the accounting side, who fully and firmly believe that a set of accounting principles, you call it standards, you call it guidelines, whatever you call it, but a set of principles is needed to cater the information needs for Islamic finance. There are some fundamental differences. I'll just touch upon them. The first one is about the objective, as I already mentioned. Objective, what is the objective? Objectives of Islamic finance also drive the objective of Islamic finance accounting. And we know that there are significant differences in these objectives, which are primarily driven by Sharia. Then it is about users. That users, the set of users of information is not exactly the same. One side, they have a fundamental conceptual difference maybe, that they may have additional information needs. But at the same time, the users of Islamic financial institutions' information might be different because the stakeholder set is different because of the very nature of Islamic finance. Like, for example, a depositor in a conventional bank might not be in need of information with regard to the operations of that bank. He is more concerned about the creditworthiness only. While on the other hand, a depositor who invests on the basis of a mudarba contract or a wakala contract with an Islamic bank needs more information, and information according to his information needs from that Islamic financial institution. So that actually makes that set of stakeholders, the unique structure, actually these things add a different set of users, and even the normal users that the shareholder may have the different information needs. So these are the reasons that we feel that there are needs. Now, I'll just touch upon one or two conceptual differences, then we'll go to the differences and how to bridge the gap. One of the difference, which is the most crucial difference that we are facing right now, is regarding the characterization of transactions. Most of the conventional accountants, and we have seen that some of the accounting standard setting bodies, the smaller setting bodies like Malaysian Accounting Standard Board, they have been taking a view that in Islamic finance, the substance of the transaction is not materially different from the conventional finance. The issue is not that simple. For them, for these sort of guys, I normally have one argument. In Islamic finance, it's not possible to just make a bunch of paper to make fool of Nauzubillah people as well as Nauzubillah Allah subhanahu wa ta'ala. You are not there just to make a different bunch of papers and do the same transaction. I firmly believe that Islamic finance is different, and we have a set of experts who actually believe in that. And that is a fundamental difference, because we say that the economic substance of the transaction in Islamic finance is not like conventional transactions, even if they may have similarities. But due to the involvement of Islamic finance structures and due to strict Sharia conditions attached to that, we cannot say that it is exactly the same. So there is very important concept that it has to be uniformity of substance and form, not only substance over form. This thing results in a situation that you need to characterize the transaction in a better way. Like, for example, if murabaha, the conventional mindset would say that murabaha is a financing transaction and it's like a loan transaction. What's different in it as compared to loan? But what we say is that murabaha is in principle a sale transaction. And Allah subhanahu wa ta'ala has said, وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا, that it is permissible because it is bay. If it was not bay, it was not trading, it would not have been permissible. So that is the fundamental difference on this side, that we say that we have a uniformity of substance and form, and we cannot just have overrule that thing just by saying that the bunch of paper is useless and actually the transaction is like a loan. The second issue is regarding time value of money. You cannot eat money. If you are in a desert, can you eat money? You are with a truckload of money. No. The needs of the human beings and the human societies and businesses is the economic resources, not money. And Islam believes, and Islam provides clear principles on that, that no value, intrinsic value can be assigned to the money. And it has to be the economic value and the time value of the economic resources. Be it person, be it assets, be it goods, but it has to be according to the economic resources. So the time value can be assigned to them. You can charge rental on an asset, but you cannot charge rental on amount of money. So this thing makes some fundamental changes in the Islamic finance industry, which you are aware of with regard to the transactions. But the same thing has its repercussions on the accounting side, because more and more accounting standards coming from the conventional side are now focused towards time value of money. And they focus on fair value based on time value of money. While we can find solutions, while we can bridge some of the gaps, but fundamentally as Islamic finance, we cannot accept that thing. So this is again one of the fundamental issues that we have. And then as we discussed, that we have additional information needs. Now I will touch upon some of the important differences that we have with the conventional standards and how we can, conventional standards, particularly IFRS, and how we can bridge them. I'll take you through these like three areas. One of them is, sorry, I'll have to take it. One of them is reconcilable differences. So where AAOIFI can do something. So we have identified, last 1.5 years, our board has been working very hard. We approved our strategy for accounting standard setting in March 2016. And since then, we have been working very hard on bridging the gaps that we can bridge at our own. So we are trying to find solutions where the accounting needs, that accounting application of our standard result in more and more acceptable results and more closer results in line with the global standards. And we have already taken those steps in multiple areas. Like you can see, this year we have issued around 6 exposure drafts already. So you can see this thing coming out in all those standards. You can see that we are trying to bring things closer. We are trying to bring things like more acceptable to the global accounting fraternity. But at the same time, we have two base conditions on which we still keep ourselves different from conventional. First is that if we see there is a specific Sharia requirement for something, then that we know that will overrule our common principles of accounting. So if there is a very clear Sharia condition, we use that condition, we apply that condition, and at times, because of that, we become different from conventional. The second side is with regard to a very clear thing, that is the characterization of transaction that I touched upon earlier. That if we believe that the characterization of Islamic finance transaction is different from the conventional transactions, then we do not do a mimicking of accounting. We say, okay, accounting does not need to be replicated. Accounting needs to be separately defined. But even the separately defined accounting, we try to keep it closer to IFRS and other global standards. So wherever we have AAOIFI FAS are based on older standards, we are trying to replace them, we are trying to improve them. Where AAOIFI FAS otherwise need improvement, we have started a comprehensive review process, and we have initiated multiple projects. 6, as I mentioned, are in advanced stage where we issued exposure draft. 1 we finalized already, 2nd is being finalized, but there are 6, 7 more projects which are in the pipeline. Then where AAOIFI FAS are not addressing the issues properly, resulting in incorrect practices, these we are actually removing. Some of the issues were raised to us by the industry, and we have put them in our project pipeline, that we are improving those incorrect practices and bringing them closer. And where AAOIFI has a FAS which is not that really necessary. One important thing that we have decided at the accounting board, that if there are standards which are not that much really necessary, we are going to replace them. Areas which we believe are irreconcilable and some differences might still be there. Even if we follow the accounting standard setting approach, or we just do some guidance, still it will be applicable. Like substance over form thing that I have mentioned, it's like definition. Example is the definition of true sale. It's just one thing, but it impacts significant number of standards. Because what is true sale as per Sharia at times is not a true sale as per the conventional financial accounting standards. And this goes with the derecognition criteria of assets. So this is one of the areas where we have at times a very clear condition from the Sharia side that this thing is a true sale. So we need to consider it as a true sale. And then lifetime value of money thing that I have already touched upon. Then we believe there are some areas where we can work together with the global standard setters, in which to some extent we expect them to come forward, and to some extent we can move forward and we can find some solutions. These are like characterization of transaction, as I mentioned, allowing a bit flexibility with regard to substance over form thing, and allowing quasi-equity concept, because they have allowed non-controlling interest, and they have allowed to some of the specific cooperative societies and other entities some type of exemptions from that, and allowing disclosures and presentations in line with Sharia. So we have identified these things where we want to work together, and we would like to do something at our own. Even if they don't support, we would like to ask them to do something so that we can bring forward and reconcile the things, so that our standards become more close to them. Quickly, I'll just go through on the changes already made. On the strategy, we made a strategy, as I touched upon. We have already made a plan which had around 16, 17 standards to be improved and new standards. There are withdrawals that we are thinking that if we have a standard which is not that much necessary, we are going to withdraw those standards. We have already identified a list of those standards, but we are going to work upon them as soon as we are done with the new initial projects. Then we have already brought some changes in some of the standards that you can see. Impairment and credit losses standard is very much in line with the global standards. Murabha new standard is much close to global standards. In case of Tawarruk, I would specifically say that is the first time that initial view that the board is taking is more towards the substance rather than form. This is one thing that we are bringing very close to IFRS. The initial view, no, standard is not final, but the preliminary study was presented, and the first time we are taking a view much close to IFRS on that. Then we are working on certain of the areas where we need to come up with new standards. One very important thing, we have already initially discussed the concept of the new concept of leasing, in which instead of asset transfer, it's the usufruct transfer. So we believe that we will be coming up with a standard which will be much close to IFRS. And one of the biggest bone of contention between the Islamic financial accounting standards and the conventional standards was leasing. So we believe that we will be coming up with a standard which is much close to that. It's okay. It's okay now. Then, as I mentioned, we are thinking of withdrawing some standards, although the process is yet initiated, but we'll be coming for that. Then I have already touched upon these things. I'll just take you through one important thing where I believe that what are the things that we believe that if we want to work together with the International Accounting Standard Board and other bodies, what are the areas where we can work together? They need to come themselves a little bit in front. One is the concept of quasi-equity. The second is the concept of a little bit flexibility on the substance over form. We believe that we can work together with the International Accounting Standards Board on the technical side. We can work with them either in form of having a converged set of standards or working on guidelines on other areas. 2 years back, when we actually, March 2016, when we approved our strategy for accounting standards, we had put a option that maybe as AOIFI we need to come up with guidelines with regard to the jurisdictions, particularly the non-Muslim jurisdictions that would not be expected to adopt AOIFI accounting standards. So we have already put it in our strategy, and we are thinking that we will be able to complete some of our urgent projects, and after that we'll be starting working on that. And we would like to work together with ISB on some of these areas. Particularly, these are two areas. If they show some flexibility on these two areas, we believe that there will be significant progress on that part. Before that, only one thing I'll just like to mention out of these things. If only we are able to get an agreement with the global standard setter with regard to the characterization of transactions, we believe that the differences, actual differences in accounting will be reduced by maybe 70–80%. And this is based on actually a study that we are talking about. And as I mentioned, that this presentation is just summary of some detailed work that we have done. We believe that if only we can agree that even if, for example, it's murabaha, and we account for murabaha as a trading transaction even under IFRS, we believe that the differences from AOIFI's accounting standards will be significantly less. But right now, the situation is that we have not seen flexibility from their side, so that's why we believe that at this moment, it might not be that easy. So we need to work together on that part. We need to collaborate better with them. And at the accounting board part, we have put all these things in our agenda, and we'll be doing the part that is needed from our side, inshallah. Thank you very much for listening.
Thank you very much, especially for following time. His number of slides scared me. He had almost 41, but thank you for really respecting the time. Sohaib, it's your turn to shine.
Bismillahirrahmanirrahim. Assalamu alaikum, ladies and gentlemen, and a very good afternoon. Okay, so I'll talk about the recently introduced Sharia governance module that the central bank issued recently. The connection of this presentation with the overall theme of the conference is that not only the Sharia standards are being standardized, not only the accounting standards are being standardized, but there are other governance-related guidances and standardized standards that are also being standardized, not by way of a formal structure, but through cooperation, through sharing of examples, and just the process of evolution. About 20 years ago, when Islamic finance was early in its infancy, Sharia governance standards were quite primitive. But as times have moved on, they have actually improved. A number of things have been added. And as you will see in the presentation, when we started to put together a comprehensive Sharia governance module for retail and wholesale banks in Bahrain, we learned a lot from a number of different sources. Okay, so the agenda for the presentation is that I'll discuss the purpose and the objectives of the module, and I'll explain the approach that we have adopted. Then some discussion on the components or the organs of Sharia governance, the most important of those being Sharia Supervisory Board, but also Sharia coordination and implementation function, internal Sharia audit function, and independent external Sharia compliance audit, which is something that we have recently introduced, and some other countries in the region have also introduced. And also, in the end, I'll talk about some of the things that we are working on for introduction in the future. So, what is the purpose of Sharia governance? The purpose of Sharia governance is quite simply to reduce the risk of systemic Sharia non-compliance. Now, Sharia non-compliance, just like any other non-compliance, is obviously not a good thing and should be, should be avoided, but it becomes problematic when it is systemic. And it is systemic when you don't have a proper framework and people are careless about it. And that is what a Sharia governance framework does, that it puts together a system, a structure, which ensures that there are people who are taking care of it, there is monitoring of it, there are people who are being held to account. And in that case, even if there is a Sharia non-compliance in one of the banks, it does not become endemic, it does not go on to become a contagion. So that is extremely important. And in terms of the specific objectives, we have mentioned two objectives. One is to provide a structure and a system to govern all the business activities of Islamic Bank in Bahrain in order to ensure Sharia compliance at all times and at all levels. But at the same time, there is another important objective, and that is to enable the banks to be perceived as Sharia compliant by the stakeholders, including the general public. Now, I'll draw your attention to the word perceived. A bank may be Sharia compliant, may be fulfilling the fatwa of its Sharia board, and they may still be doing something which in public perception is not up to the mark. And if that is the case, the regulator cannot sit on the sidelines, because the perception of Sharia compliance is as important as Sharia compliance in actuality. So some of the product structures that may fall foul in terms of the public perception may come into this category, where despite being strictly Sharia compliant in a technical sense, the regulator may have to come up with guidelines about whether to use that particular product or not. And then just to explain what approach we have taken. So what we have mandated is that every retail and wholesale bank in Bahrain, Islamic Bank, has to have at least 4 components to its Sharia governance system. One is the Sharia Supervisory Board, which is of course the most important, and we have detailed guidelines about what it means and what are the fit and proper criteria and reporting and all whatnot. And then you have a Sharia coordination and implementation function. In some other jurisdictions, we call it internal Sharia review function. In some other jurisdictions, you have a resident Sharia scholar which performs this function. We call it Sharia coordination and implementation function, and the head is the Sharia officer. Then you have an internal Sharia audit function. Now, Sharia coordination and implementation function is an ongoing, but the Sharia audit function is a post facto function. And then the fourth component, which we have introduced, is Independent External Sharia Compliance Audit, or ISCA for short. 5 years ago, Oman was the first country in this region to introduce ISCA, and then Bahrain introduced it, announced introduction, and then Kuwait followed, and then Pakistan. And there are some other countries which are thinking about introduction of this function. These are the four main components, but then to ensure that these components are there and working properly, you need support from the stakeholders of the institution itself. The board of directors, which is ultimately responsible for the performance of the bank, has to give its support to Sharia governance framework. Then the management, which has the operational responsibility to conduct day-to-day business, it has to provide its full support. Shareholders also are important, specifically in terms of the appointment of the Sharia board. It is by way of a shareholder vote in the AGM and not by the board of directors. And then the regulator. So these four main